Welcome back to Explain the Charts, your go-to channel for in-depth market analysis. Today, September 26, 2025, we're tackling the New Zealand dollar versus the US dollar, NZDUSD, a pair that has been exceptionally volatile due to significant fundamental shifts. Recent news confirms the NZDUSD has dived to fresh three-week lows, accelerating its downtrend below 0.5840 as the US dollar appreciates. This decline is largely attributed to a firmer US dollar and moderate risk aversion pervading the markets. Crucially, the Reserve Bank of New Zealand is expected to deliver further interest rate cuts at its October 8th and November 26th meetings, signaling a deteriorating economic outlook for New Zealand, which typically weakens the NZD. Conversely, in the United States, the dollar has found strong support from Fed Chair Jerome Powell, who recently warned of upside risks to inflation and hinted at a gradual easing cycle, rather than the steeper cuts markets initially anticipated. This hawkish tilt from the Fed, alongside resilient U.S. economic data, including a significant drop in jobless claims, reinforces the U.S. dollar's robust performance. We've also seen broader market movements like euro to US dollar and pound sterling to US dollar accelerating losses, and commodities, such as gold receding, all pressured by the strong greenback. It's clear that the divergence in monetary policy expectations between the RBNZ and the Federal Reserve is a primary driver of the NZDUSD's recent movements. Now, let's turn our attention to the one-day chart to visualize these trends over a longer period. Looking at the daily candles, we can clearly see a predominant downtrend throughout much of 2024 and extending into 2025. Notice the series of lower highs and lower lows, a classic bearish chart pattern, which aligns perfectly with the news of a subdued New Zealand economy and the RBNZ's dovish stance. The substantial red candles throughout this period, especially the sharp drops observed in November 2024 and January 2025, reflect periods of intense selling pressure and significant bearish sentiment. These dramatic drops, some exceeding 10% in a single day, highlight extreme volatility and market participants reacting forcefully to prevailing economic data or unexpected announcements. Such aggressive moves suggest that any bullish attempts have been quickly met with strong resistance, confirming the dominant bearish control over the past year. Zooming into the recent daily action, the news from September 9, 2025, that NZDUSD ran into key resistance at the 100-day moving average near 0.59596 is particularly relevant. Although the pair attempted to stretch higher around that time, it failed to break above this significant technical barrier, reinforcing the bearish outlook. Currently, as of the close on September 25, 2025, NZDUSD is trading around 0.57614, significantly below the 0.5840 level mentioned in yesterday's news as a fresh three-week low. This indicates that the downtrend has continued its momentum, pushing the pair even lower in very recent trading. The daily chart shows that the 0.5840 level, once a fresh low, is now acting as a new, immediate resistance zone that the price struggled to overcome. The current level near 0.57614 is testing new lows, suggesting that previous support levels have been decisively broken. A key support level appears to be forming around 0.5750, based on recent lows, which traders should watch closely for any bounce or further breakdown. Now let's switch to the 1-hour chart to examine the shorter-term price action and confirm the recent news-driven movements. Looking at the candles from September 22nd to September 25th, we can observe a clear downward trajectory, confirming the downtrend reported in the news. The consistent formation of red candles and lower highs on this time frame indicates continuous selling pressure. Notice the sharp decline on September 24th, corresponding directly with the news that NZDUSD dived to fresh lows below 0.5840. This hourly view gives us a granular look at how quickly the market reacted to the strengthening US dollar and expectations of RBNZ rate cuts. The immediate resistance on this chart appears to be around the 0.5820 to 0.5830 area, which was tested but couldn't be sustained after the recent drop. For active traders, The breakdown from this range indicates that short positions may have been favored, with stop losses potentially placed above these hourly resistance levels. Let's refine our focus even further to the 15-minute chart, specifically around the time of the reported dive on September 24th, between 11 o'clock Universal Time Coordinated and 1400 hours Universal Time Coordinated. This zoomed-in perspective clearly illustrates the intraday volatility and the precise moment NZDUSD broke below the 0.5840 level. We can see a distinct series of bearish candles initiating after the 11:06 Universal Time Coordinated candle closed at 0.58365, with subsequent candles rapidly dropping. The candle at 12:36 Universal Time Coordinated, with an open of 0.58365 and a close of 0.58275, marks a critical breakdown point, confirming the news event's impact. For intraday traders, this 15-minute chart would have provided clear signals for entry into short positions as key support levels were breached with conviction. The swift move below 0.5840 would have been a high-probability shorting opportunity for those monitoring both news and technical triggers. Volume indicators around this period, though not shown on this chart, would typically surge, confirming the strength of this bearish move. Identifying such decisive candle formations on shorter timeframes is crucial for pinpointing optimal entry and exit points in fast-moving markets. Returning to the daily overview, let's recap and look ahead. Short-term, the NZDUSD remains firmly in a bearish trend, with the most recent price action pushing it to fresh lows around 0.576. Reasons to be bearish are strong: the anticipated RBNZ rate cuts, a faltering New Zealand economy, and the continued strength of the US dollar, bolstered by the Fed's hawkish tone. The likelihood of a move lower towards 0.5700 in the short term is high, perhaps 70 to 75%, especially if upcoming US GDP and PCE price index data exceed expectations. Conversely, reasons to be bullish are currently scarce. A significant dovish pivot from the Fed or an unexpected improvement in New Zealand's economic data would be required for a reversal. In the long term, the outlook remains bearish as long as the monetary policy divergence persists, with a potential target towards 0.5600 if current support breaks. Key price levels to watch are the immediate resistance at 0.5800, then 0.5840, and the more significant 100-day MA resistance around 0.59596. On the downside, initial support is seen near 0.5750, followed by psychological levels like 0.5700 and potentially 0.5600. For traders, consider short positions on rallies towards resistance, with tight stop losses, and look for confirmation of breakdowns below current support. Keep a close eye on the upcoming RBNZ meetings on October 8th and November 26th, as well as any further statements from Fed Chair Powell. These events will be critical in dictating the next major moves for NZDUSD.